Hi, my name is Jalyssia A. Hancock, and here are the changes in the U.S. Treasury market and interest rate forecasts that occurred on April 14th through the 18th. I will be naming the major events that occurred this week. On Monday, April 14th, the yield curve steepened. This was due to the stronger than forecasted economic data that was released that boosted stocks and caused people to believe that investing in U.S. bonds was not safe. The Treasury prices fell and Treasury rates rose, and this caused the yield curve to steepen as a result. On April 16th, which is Tuesday, the yield curve flattened. This was due to the controversy between Ukraine and Russia. The Ukrainians' demand of haven currencies boosted, and the Ukrainians saw that the U.S. dollar as a haven currency of choice to shield them from the tension that was going on with Russia. So they increased their investments in the U.S., and this caused the Treasury prices to rise, and then at the same time the Treasury rates fell. It was reported that 30-year bond yields were at the lowest level in 9 months. As you can see on the graph, the yield curve for Tuesday, which is the green, and then the yield curve for Monday, which is the red. The yield curve for Tuesday, it shows a decrease, and which is flattening. And here you see the 30-year flattened, as I stated on the previous slide, and this caused our 1-year Treasury rate forecast to decline. On Wednesday, April 16th, the yield curve flattened, and this was due to a speech from Chair Janet Yellen announcing that the central bank has a continuing commitment to support the recovery of the economy. The Federal Reserve is working hard to reach the goal to stabilize prices and increase employment rates. In this announcement, she stated that the longer it takes to reach the Fed's targets for employment and inflation, the longer the Fed will keep rates low. This caused people to go ahead and invest in these U.S. Treasuries right now while they're cheaper rather than later. And this inflation expectations caused demand for loanable funds to increase within the short term, and 5-year rates rose 3 basis points, and 30-year yield rates dropped. And I have circles for this yield curve, and I am comparing the day before with Wednesday. Here are the 5-year, and the green is on Wednesday, and it is above the red, so it did increase, as well as the 30-year. And this caused the interest rates for the forecast to decrease as well. On April 17th, which was Thursday, the yield curve steepened. And this was due to the announcement that the crisis in Ukraine and Russia ended. The yield curve, the Ukrainians pulled their money out of the U.S. because they felt like that they didn't need the U.S. as a shield anymore. So as a result, the 10-year note yields pushed up the most in a month, Treasury prices fell, and yield rates rose. What also occurred on this day was the report that was released regarding the lower than predicted unemployment rates, and this caused the 30-year yield rates to rise. And as you can see, there is a big gap between what occurred on Wednesday, the yield curve on Wednesday, and the yield curve on Thursday. This caused our interest rate forecast to rise several basis points. This was the largest move for the week due to the events that occurred and discussed in the previous slide. On Friday, this was a national holiday, and there was no information regarding the market and released on this day. By the end of the week, the 1-year rate forecast increased overall due to the sudden rise in the yield rates on Thursday. And this concludes my presentation. Thank you.